Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with an income pick. But before we talk about the income pick, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with a lot of risk. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. While you're browsing through the website, you could also sign up for some free reports that we offer to our readers, and they get delivered to your inbox. Many real estate investment trusts, REITs for short, have had a tough go of it since 2020. First, quarantine orders meant people were forced to stay at home. This was not good for REITs that specialize in office, buildings, shopping malls, or had entertainment portfolios. While the global economy has opened, REITs are now having to face decades-high inflation. To combat high inflation, central banks raise their interest rates. Another move, since this makes borrowing more expensive and weighs on REITs' profitability. These headwinds have taken the sail out of a lot of REITs, but of late, REIT stock have been rallying off their lows and are now starting to reward patient investors. A good example of this is EPR Properties, traded on New York Stock Exchange under symbol EPR. John, if you want to elaborate a little bit.
Yeah, thanks, Mo. EPR Properties is the leading diversified specialty REIT that owns Experiential properties. The company's $6.7 billion plus portfolio is made up of 363 locations and more than 200 tenants in 44 states and in Canada. As of June 30th, the company's Experiential portfolio consisted of approximately 20.1 million square feet, which was 98% leased and included a total of 80.7 million in property under development and around 20.2 million in undeveloped land inventory.
I think before we go into any details, if you could explain a little bit, what are experiential properties?
Well, just quickly, like some of EPR's product or experiential portfolio includes 171 theaters, 57 eat and play or entertainment properties, and that includes restaurants, mini golf, bowling, etc. It also owns 24 water and amusement parks, 11 ski resorts across the U.S., 7 experiential properties, which includes indoor water parks, recreational and leisure. It actually owns 1 commercial gaming facility, which means casino, and 3 cultural properties. And for them, culture means zoos, aquariums, and museums.
How did EPR Properties fare in 2020 and 2021?
Now, even though the global economy is reopened, it's not all fun and games at EPR. In September 2020, Regal Entertainment Group filed for bankruptcy protection. Now, Regal leased 57 movie theaters from EPR Properties. As a result of the bankruptcy, Regal did not pay its rent or monthly deferred payments for September 2022, but has subsequently paid a good portion of this amount pursuant to an order of the bankruptcy court. Now, to make a long story short, this past June, EPR entered into a restructuring agreement with Regal. Now, this provides EPR with a stronger tenant credit, long-term master lease, and actually a percentage rent component. Now, this allows EPR to participate in the recovery of the box office. And as you can remember, this past summer, Oppenheimer and Barbie were massive. This also provides EPR with more visibility in its earnings outlook. On top of that, this past July, Santikos acquired Southern Theaters, making it the 8th largest theater circuit in North America. EPR has investments in 10 Southern properties, and there were no structural changes to its existing lease terms. But with the acquisition, Santikos paid the entire remaining deferred rent from Southern of $11.6 million. And that rent will be recognized in the third quarter of 2023.
And I believe that's obviously good news. How did this company do in the second quarter of this year?
Well, for the second quarter ended June 30th, EPR announced that total revenue actually increased 7.7% year over year to roughly 73 million. The company's net income was down slightly at 7.5 million or 10 cents per share. Other quick numbers: funds from operation as adjusted climbed slightly more than 10% to 97.7 million or $1.28 per share. And adjusted funds from operations were up 7.1% to roughly 100 million or $1.31 per share. Now, in addition to regular quarterly collections during the second quarter, the company had collected 7.3 million of deferred rent. And through June 30th, 2023, EPR has collected approximately 135 million of rent and interest that has been deferred as a result of the 2020 health crisis. Now, during the quarter, the company's investment spending totaled 32.2 million. bringing its year-to-date total to roughly 99 million, I'll say. Investment spending for the quarter was primarily related to experiential build-to-suit developments and redevelopment projects.
And now let's talk about how does the rest of the year look for this company?
Well, prior to the second quarter, EPR wasn't providing earnings guidance. Now, that's because its outlook was a little uncertain due to its position with both Regal and Southern. But now that those two issues have been resolved, it can provide earning guidance for 2023. For the full year, EPR expects to report funds from operation as adjusted of $5.05 to $5.15. Now, that represents an increase at the midpoint of 9% over 2022's performance. Additionally, the company is confirming 2023 investment spending guidance in a range of $200 million to $300 million.
That it recently declared a monthly cash dividend of 27.5 cents per share.
Yeah, strong liquidity position and more visibility into its earnings certainly bodes well for EPR Properties' monthly dividend. On October 16th, the company's board declared a monthly dividend of 0.275 per share, or $3.30 on an annual basis, for a pretty big dividend yield of 7.74%. Now, in order to qualify as a REIT, a company is legally required to distribute at least 90% of its taxable income. When it comes to a REIT and their dividend payouts, it's important to look at the adjusted funds from operation, which is a measure of its true cash flow. EPR's second quarter adjusted funds from operation was up 7.1% at $100 million or $1.31 per share. That's more than enough to comfortably afford its quarterly payout of 0.825 per share. And thanks to its solid 2023 guidance, there's a good chance EPR's board will announce another distribution hike over the coming quarters.
And EPR Properties unit is actually beating the S&P 500.
Yeah, REITs have taken a hit, but EPR Properties is actually doing quite well. It's trading at record levels before the stock market crashed in March 2020, and it's continued to do well since bottoming, especially in 2023, outperforming the broader S&P 500. As of this recording, EPR stock is up roughly 18% year-to-date and 23% year-over-year. By comparison, the S&P has rallied 12% year-to-date and 16% year-over-year. Now, while EPR Properties stock has made some pretty big gains, it still needs to climb an additional 40% to get to where it was in January 2020, and there's every reason to believe that it eventually will. Wall Street analysts have provided a 12-month share price target of $49.50 to $54 per share, and that's just a little shy of where it was in March 2020.
All right, John, thank you so much for your analysis. Just to recap, EPR Property is a great specialty REIT with the growing and diversified portfolio of experiential properties. It reported strong 2022 results, with that momentum carrying in 2023. Most significantly, the company recently announced a resolution to Regal's bankruptcy, providing it with long-term master lease and a percentage rent component, this providing the company with more visibility in earnings outlook. Moreover, Centeco's July acquisition of Southern resulted in Southern paying off entire remaining deferred rent of $11.6 million. This, coupled with solid deferral collections, leave EPR Property with an even stronger liquidity position. It also allowed management to provide 2023 funds from operation and adjusted per share earning guidance growth of 9%. This bodes well for both its share price and high yield dividend in 2023 and 2024. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.